All right, guys, welcome back to the channel. Hopefully you made it here before the bots. Today's video, we're looking at the blow off top move happening for Bitcoin, happening in the stock markets, happening in real estate. And of course, I'll cover commodities as well. We are seeing cracks into this peak. The cracks have continued to form in the last 24 hours. In particular, we're watching the bonds, also looking at the US dollar as well. But how does all this relate into BTC? That's what we want to cover today. Of course, looking at what Bitcoin is up to next, the key resistance levels, any of the structural support levels for this continuation of the bull market, along with the Elliott wave, been covering this, and the move to the upside for the total cryptocurrency market cap, along with ETH and some of the other major altcoins today. So let's start it off with BTC, the short term here. You got the daily chart. It is climbing as I'm filming this as well. I've talked a lot about this sort of blow off top, but really where I'm coming from is that I anticipate to see higher prices because the cycle has not peaked yet. And again, we're seeing further upside. Now I've got this on the chart, 600%. This is from the cycle low, November 2022. That's how far at the moment Bitcoin has run. So just over 600% from the low. Typically what we see at tops, and I guess it's up to you whether you want to call it a blow off top or the feeling of a blow off top, which is pretty much what the majority of retail do, or they look at, is that they expect the prices to keep going even further. Now there's a ton of fundamentals, there's a ton of news, there's a ton of reasons why at these high prices it should keep going and why we should anticipate or why we should expect, more importantly, you know, $200,000, $250,000, $300,000, $500,000, just some crazy numbers. But again, I just want to remind us, the main goal that we have in trading or investing is to make a profit. So just scale it back and take your profits along the way, especially when it starts to run pretty long into the cycle. We're at 912 days in the upside today. Bull markets, for Bitcoin at least, generally go for around that 1,000 to 1,100 days, which means we're basically 3 months away from that first level, about that 1,000 days. And if you want to take it out to what the previous cycles have done, they've done about 1,070 days. So give it another 2 months after that. You could be looking 3 to 5 months just based on averages from history. If we get to those timeframes, so 3 to 5 months from now, and we really see a major pickup in extremely bullish news, blow off top type news where people really believe this market can't go down, that would be a very strong warning that it's probably likely we don't have long left. If not, you know, the top is already in, like what we saw in December, like we saw in January being local tops, but we had some pretty significant news there at the time. Also pretty significant news in March 2024. And each of those occasions there in December and March, we had some pretty strong signs that the market was going to at least pause and pause for a long time. That was our 3-bar down rule. And of course, we've also now seen it to the upside on the weekly chart. So that's the first levels there. Now let's throw on some of these lines. Lately, we've been hearing about the golden cross. So I'll cover this very quickly. It's a lagging indicator, not something that I choose to use. It lags because you're just waiting for the moving averages to basically show you a signal. And when you get the death crosses, usually it's around the lows. So that's a cross of in this case, the orange under the blue. You can see over in 2024, orange under the blue, somewhere around the low again. The orange under the blue, you've got a low here back in 2023 as well. And then the opposite, you've got the golden cross, the move of the faster moving average going above the slower moving average. It's not necessarily a bull market signal because it's already been going on for a couple of months. And in this case, we just got it today. So that's about 40% up from the current low. So let's turn the golden cross and death crosses off. Not really useful information, in my opinion, of course. If it works for you, great. But the main thing that I'm concerned with are the next resistance levels. As we talked about in yesterday's video, we're looking at the short-term signs here. Previous old all-time highs around the 109 to 111 being the 75% of our 3-bar extension move. The reason we were using that is because it showed up and played very nicely with the 50% level. So we had the pause there at 50%, the breakout, and now we've come towards a 75. So the next level above that is around 117,000. Let's take it out to a longer term chart, looking at the weekly, connecting the two previous all-time highs of 2021. That has been the support level. We saw the market come down onto that level on the 3-day. That's what this line is here. Then the weekly took off from that, using it as support. That's why we're looking to the next level, which also called the two previous tops for this cycle. So around the 108, 109, that is connecting all previous all-time highs. Well, basically from 2017, 2021, 2025, that price is getting very close to the next level. So if it happened this week, you're looking at 113. Next week, you're looking at 113 and a half. And basically just add a few $100 each week after this week to get to that resistance level. Most of the time, people come to YouTube looking for some bullish hopium for their portfolios. You know, a lot of people are still in heavy losses. Now, what might help their losses if they're still holding a crap ton of shit coins, altcoins, meme coins, all the coins besides Bitcoin, if your portfolio is heavy in that, you are waiting for the USDT dominance chart to break down. If you're not watching this, definitely get on it. While Bitcoin has been rising, the USDT dominance has been stalling here. But in the last 24 hours, since yesterday's update, we had a daily close underneath the all-time support line, what I'm calling the all-time support line. This line in the diagonal here, the white diagonal line, is very similar to the Bitcoin all-time high prices. Basically, every time Bitcoin's put in an all-time high or a very significant top for its cycle has been on this diagonal line for the USDT dominance. Now, if we get the breakdown, this is obviously going to be more liquidity into Bitcoin and altcoins. So far, we've only seen a lot of that liquidity come out into BTC, and this chart has been holding up. But if it can break down, that is going to be even more money into the space. Now, is it going to go to Bitcoin or is it going to go to altcoins? That's, of course, the multi-million-dollar question. What we've seen in the past, and we have to just go back to history because that's all we have, is that when it does get a significant breakdown, generally you would see more of that money flow out into even higher risk assets like all of the shit coins out there. So hopefully people are going to start getting rich. But what happens every single time is that people hold on for too long, hoping for bigger and bigger profits. Last time we got a pause at 3.7%. So watch out for that again if this USDT dominance finds support along the way into that level. Breakdown at 3.7%, that is when you're probably going to see mass hysteria and mass mania. It's not a guarantee, which is the problem. But if it did happen, that's what I'm looking for here. You've got a support back in 2022, another support here in 2024, and then another support in 2024, 2025. So that's 3 levels at the same line. What Gann says, WD Gann, if you're unfamiliar with him, look him up. Absolutely gun trader and investor of all time. Gann says there's a very high probability, not a guarantee, but a high probability of a 4th time breakout. So ideally, we would see that breakout if we got to that level, and that could take a little bit of time at this stage. Now, there is still a lot of movement and price action if the USDT dominance only gets to that level. You're at 4.45 now, and that level's around 3.7%. So 0.7% in the USDT dominance is still a lot of money that could flow back out into the space. But the warning there is to not get greedy with the altcoins, because same thing could happen again. People are waiting for bigger and bigger gains. They just don't come, find support, and then it starts to rally back up. People hold on, and then the cycle rinses and repeats. Now, the long-term chart for BTC, the monthly chart here, is looking rather healthy. We've got 10 days to go until the monthly close. Should this close above 104,500, nice strong position. Ideally, it's above the top as well, around $109,000, but above the 50%, that's going to still set it up to be the highest monthly close in history. And then we look out for the mid levels that we've been tracking. Another psychological level is 120. Ideally, I'm looking out for the 100% level. So that's for this range to repeat from the low. That'll take us into the low $130,000 region, which would also break all of these previous tops, which essentially is your blow off top, taking out all of these previous highs, major resistance that has been in the market, looking back to 2021. So now you could call it, it's been 4 years since it touched it last time and essentially hasn't broken out of that level. So if it can, that's the blow off move. It might not meet your criteria of giving you hundreds of a percent, but to me, that looks like a blow off because we've actually exceeded the expectations of the resistance line. Further hopium, bullish news. Now we're looking at the total crypto market cap and Michael's work here on the Elliott wave. So go and check out Michael's channel as well. He'll post his updates there on X for his YouTube videos. Now it's essentially in this final phase. The major one we're looking at here is the yellow line. So this yellow one here, that's wave 5. And we've been tracking this for years now, going back to 2022, 2023, when this first started. So that's when we've got the first wave 1 into the final wave 5. So you've got the bigger 5 up here. So you're looking at cycles within cycles within cycles. And this is all good news, at least for the bulls, for further upside here. The yellow line into your final leg 5, the red line into your final leg 5. The white line here is potentially the wave 3 that we are in. And the wave 3s are usually the hardest, fastest looking moves. And that is kind of what we're seeing with Bitcoin at the moment. It has been moving very, very strong into this final phase. Now within this wave 3, you break it down again into wave 1, 2, 3, 4, 5 into that final peak. And at the moment, we could be sitting somewhere in the 3 of the 3. Now it sounds all a little bit too confusing. So if it is, just stick with the macro cycle here and know that within the macro movements, so you're just looking at this overall movements, you're going to get nice strong moves to the upside and pullbacks, strong movements to the upside, pullbacks. That's essentially what we have been in this entire time. So if it's too much to sort of figure out the in-betweens of the wave, then just expect that you're going to see nice big moves up and then those pullbacks into this final leg of wave 5. Now, if you want to learn more about how we are positioning ourselves for the end of the cycle, navigating this market, whether it's Bitcoin, stock markets, real estate as well, check out TIA Premium. Link is in the video description. And we also have our members review in the Discord. So to get access to that, just click on the free report, drop your name, email address, and you'll get an email that shows you how to get into Discord and have a look at all of the reviews from our members as well. Okay, over to more of the Bitcoin and cryptocurrency data. Before I get into the stock markets, $500 million of liquidations here. Basically another reasonable day, reasonable activity. People are still interested in the space and getting more interested in the space. According to Google, Bitcoin has shot up and the search volume for crypto is still flat here. You got a slightly higher low, nothing to write home about yet. I would like to see a breakout of the highs here at 22. So we're looking at the blue section and the number here on the blue is 22. Bitcoin has broken out of the high now. So we had the tops here at 58, 57, 56, and 56. That has broken out to 60. So there is a lot more interest in Bitcoin at the moment. I guess what you would normally hear is that the market follows BTC, and provided Bitcoin breaks out and holds above the key levels, whether it's on the price chart or even in the market sentiment news, then we could anticipate that it's going to flow over into crypto as well. That risk on breeds more risk on, and people get even crazier, looking for bigger and bigger gains. They get crazy. They look for shiny things to try and make the money that they missed out on earlier. Try not to be one of those folks. Try to walk away with profits from a market, which means if you do walk away with profits, more than what you came here with, is that simple, you're in front of like 90% of people. Most people will lose money in the markets trying to do the same stupid things for decades that traders before us have talked about. Just make money from the market. Just take the profits from the market. Next up is the daily exchange volume. We're also seeing higher highs, higher lows, waiting for this to print another higher low. So this is the exchange volume on the 7-day moving average. At this stage, it seems like it would because we've seen an uptick in the Google trend words, meaning more people are coming back to the market, and the liquidations have also remained relatively high. You know, we're sort of getting that $500 million a day, with some of the lower days hitting about $250 million, you know, $500 million here, the lower days on the weekend, $250 million, which is a lot more than what we saw through March and then some parts of April as well. That's when things were a little bit more quiet. So we are starting to pick up with liquidations. Now, for the stock market, it is continuing to track the fractal that we've been following here. This is the red line from 2020. The reason I use this is because we had an extreme event, COVID, call it a black swan. It doesn't matter. The point is you want to make money from the market and follow the trend. And at this stage, it's following a similar trend. We talked about this stage being a bit of a choppy period for the S&P 500. It's moved up into those areas. It's now chopping around. We had a couple of red days here, but essentially one day down. Don't worry about the reds. This is the day here, day down, and it broke a couple of the swing lows as well. So the daily swing lows after this grind up to the higher prices. And guess what? The day before, a Monday, we had the highest retail buying of the stock market, $4.1 billion. Again, retail screwed it up like they did back in March, just going way too heavy at the wrong time. It's not a bad thing to be buying on the way up, buying on the breakouts, but for whatever reason, everyone went heavy there. And even if this is the pullback and the only pullback, this is the first time since the low, or even since here in March, that a daily swing has broken two swing lows. So basically, a bit of a short-term gotcha bar. Holding everyone into their positions here. So it wouldn't be unsurprising if it did turn around a little bit more. Of course, we'll let the market do the talking here. The cycle suggests it's probably got a little bit more of a grind around before it starts to pop up. On the flip side, even with these retail guys, I think they're going to get back into profit if they're able to hold it because of what we'll see next with the cycle. I think it's going to head up, and I think we're going to see new all-time high prices for the stock market because, well, the 18-year cycle is still up, and we're, at least in my opinion, we've still got a little further to go with the real estate and the economy, even though we're seeing some breakdowns in the economy, which I'll get to in just a sec. But I just want to finish off with the cycle news itself. This is our predictive cycles on the TIA indicator suite. You can get this, there's a link in the video description, 7-day free trial. Check this out. This is very, very helpful, positioning ourselves for the upcoming months. This also is forecasting a bit of a corrective phase through the second half of June. So now we're coming up to that now, about a month away. And then things are looking rosy again for the Q4. So maybe a bit of a sideways period, bit of a choppy period, and Q4 looks a little bit cleaner overall. So as I posted about this back in December 2023 into the winner's curse phase, we've been following this for many, many years on the channel. Prices are still up. I have no reason to doubt this at this stage. Things are still heading higher. And it's just a bit of an interesting one because at the time, it's hard to understand how this could be possible. Like with a comment, it's interesting to read those comments from that time in the past, right? Please correct me. In Australia, the property market is already out of budget. So this is 18 months ago. How come we're in the middle of the 18-year cycle? Well, you know, we're kind of on the way up. Local Australians cannot afford housing. So how is it going to boom, and boom for who? It's just crazy how it actually works out time and time again. And this has been going on for over 200 years. So again, I don't have any reason to doubt this. We're still heading up into blow-off tops. Even for stock markets around the world, India, I mean, that is just the chart on a monthly chart going back throughout history. India heading to fresh highs. All-time high was back in August 2024. Japan has been running up pretty hard since 2009, putting a new all-time high, 34-year high. China, once China continues to join the party, we might even see big blow-off tops here. In the past, it has done roughly 10x. Here's 1900 point low to its top here at about 18,000 points. Significant correction, ran again to 32,000 points. We've seen it around the world. Brazil, new all-time highs, again pushing even further. Italy, fresh highs here going back to 2007. Germany, yesterday, again, a new all-time high. That is very much a blow-off move. Top 50 in Europe has hit 25-year highs. And as we looked at yesterday, Canada also hit a new all-time high. A slight pullback today because, well, we also saw the US pullback. US dollar weakness has continued 2 days underneath the 100 level, so 2 days closing underneath 100. The 3-year low has continued to pause the market here like it did back in 2020 and 2018, and it's found further resistance underneath 101. So this is also looking good for the blow-off top move for commodities and of course BTC as well. Mostly, we're seeing that with BTC and some commodities. They don't all move together, but overall the commodities have been holding up relatively strong as we checked on the basis here. So we're looking at the Goldman Sachs Commodities Index here, sitting right around 50%. Okay, good reminder, hit the like and subscribe to the channel if you haven't already. Now the cracks continued to form here overnight for the bonds market. Here is it on the daily chart. It had a new lowest daily close going back to January 2025. So we're down to 110. The news for this is that the bonds auctions didn't go too well. The bonds have dropped and the yields have continued to rise. Again, this might be the story that leads to the peak. We just don't know yet. A lot of people are starting to pick up on this, so I'm a little bit hesitant to nail everything to this particular narrative that crashes the market, essentially gets to the peak and then crashes the market. But it is possible. The yields have continued to rise, which would probably put pressure on the Fed not to cut the rates, which then puts pressure onto homeowners and their mortgages, and so on and so forth. The snowball can continue from there. But in the meantime, the stock markets have all continued to go higher. That's how this part of the cycle works, at least. So the 10-year yields are up now at some fresh highs going all the way back to February. So 3-month highs with some good high closing prices. The 30-year yields have hit 5%. That was the news yesterday. This is the highest since they've been in 2023. And then around the globe, as we checked yesterday, we looked at Japan, Germany. There is a lot of other global yields also increasing as well. So the market is getting a little bit concerned about all this debt that is loading up in the system. Now, on the back of that, just because there is something building there, those things can take quite some time. It could take months. It could take a couple of years. In the meantime, let's get back to altcoins and how this is all playing out. The total crypto market cap is in the stronger position. Here is total 3 trying to get above the 50% level, and it hasn't broken that swing top from last week. However, total market cap, including Bitcoin and ETH, because Bitcoin is in the stronger position, has broken the swing top from last week. And if it closes in the next couple of days, 4 days in the case of the 7-day chart, closes here, then we got a close above the swing top and above the 50% level, which essentially is a sign of strength here for the market. And that would line up with the Elliott wave cycle with further and further gains to the upside. So 50% at 3.33 trillion. Next target's around 3.7 trillion, which were the previous all-time highs. And as it stands, we're above the previous cycle top as well. So in a relatively good position for this quote-unquote blow-off top move. Does that mean good things for altcoins overall? Now, is that good things for altcoins? Well, the USDT dominance is a major one that I'm watching. And then, of course, total 3 also needs to show further signs of strength here to get back above roughly around that $970, $960 billion. And, of course, you've got the psychological level at 1 trillion. In the meantime, however, ETH isn't looking so bad anymore. Yes, it's still under 50% at $2,750. So ideally some closes above 2750, 2800 consolidation would give it that extra strength to run towards the next tops in the mid 3000s. The nice short-term news here, you can see here on the Binance chart, a little extra green volume for the days that are closing higher here. Anytime the sellers have come out, the buyers have really pulled back, taken their ETH off the market, so it's not there. You can see that in terms of volume, just wasn't happening. And then the next day it's come back, buyers a step back in, and we're seeing the price just climb slightly higher. It's very, very short term, but at least there's some good signs there in the short term that it's holding above 22 and the diagonal here for the bull market. For now, ETH BTC is struggling a little bit here. It's got to get back above 0.024. You can see the swings have turned down. We've got lower highs, lower lows. The 1-day 1 bar has turned down, so that's a short term there. But if everything holds out, even on the short term, looking at the 50% level where it sits here at 2.2%, that could get it into a good position to come back and test around the 3% level of BTC, which means it'd be outperforming Bitcoin. Could be short-lived based on the timeframes that we were watching earlier in the video, so big one to keep watching. The other ones we're watching are the major altcoins here. XRP BTC has continued to slide while Bitcoin has gone up. So we had a weird day yesterday. It looked like a ton of manipulation on the charts here on Binance and across the board. Huge wick down, taking out any of the stops that we saw lower, but then closing higher. It did close above 50% again. So that's put it into an okay position. At least hopefully that's wiped out any of those stops that were there, took the liquidity and then closed up again. We saw it close okay on the US dollar chart as well, putting in a higher low, even with that, looks like an absolutely ridiculous manipulative wick to the downside with some good closes here. So SUI also in a strong position there above the 50% and coming back to test the $4. Just to finish up on XRP, although it's beneath 250, it's still holding that 230. So it's in a very, very tight range at the moment, looking to break out again. Still got higher lows on the long term and lower highs on the short term. So the longer term still holding this market up. That's XRP, that's SUI. And the last one I'll look at is Sol, which had a close above the 50%. So similar position to XRP. It's holding the previous swing top, hasn't broken the next 50% level, and it's looking just that slight bit weaker overall on its BTC chart. Still not above 0.0018 is the round number that I'm looking for here for Sol BTC to confirm and then push that bit higher. So out of these three, Sol, SUI, XRP, SUI still in that stronger position. Now some might point towards the stable coins on the SUI platform, SUI network, up 200%. It's the latest news, up to 1 billion for their stable coins. Overall, SUI still sits at about 11, just below Aptos, Avalanche, Polygon, Solana, Tron, ETH, of course, the biggest mover here. So that could be one of the higher risk plays, considering SUI is in that stronger position overall against Bitcoin, against the USD chart. That's what I would be looking at for those next plays should the altcoin market go off. I know I talk a lot about altcoins and how they're in a very weak position, as we could see with the total 3 market cap. But in some cases, you've got altcoins that are sitting in a relatively strong position. And when we compare them to the others here, just those few, you can see SUI's in a much better position. And why not? The big old privacy coin that did amazingly well the last 24 hours, that has pumped. Monero out of nowhere, absolutely going nuts from $230 in the last month up to $400, nearly back at a new all-time high. There's 517, previous tops here at 450. So nice work if you've been in the privacy coin space, holding your XMR, not looking too bad against USD, but against BTC, still not doing too well. Anyway, let's leave it on a positive note. Like, subscribe. I'll see you guys back at the next video. Congrats to everyone. We've got a new all-time high, $110,000. And for the Aussies, 171,000. 3 more thousand to go to break that previous top. See you at the next video. Till then, take care. Peace out.